political parties and whoever happens to be in charge chooses, by and large, who is at the helm of these regulators. And the reason for the repeal of the Chevron Doctrine is the logic held that it was an extension of the executive branch to be able to have additional powers when you are interpreting the laws that you see fit without any sort of control held by another branch or any sort of oversight and checks and balances held by the other branch. So that's where this is a removal of additional powers and a shift back from executive to judicial. And this has been 40 years in the making, but it was definitely sort of a loophole. I think that built up over the last couple of years to decade.
Hey everyone, this episode is brought to you by Sei, the blazing fast parallelized blockchain, which is unlocking Solana-like performance for the vast ocean of ETH devs out there. Now, you're going to be hearing all about Sei and their new V2 upgrade, but if you take away one thing, the EVM is here to stay. There are some problems with it, which we're going to get into later in the episode, but Sei, and especially their V2 upgrade, is helping solve that. So thank you very much, Sei, for making this episode possible. Hey everyone, this episode is brought to you by Kinto, the safety first L2, which is accelerating the transition to the on-chain financial system. They've got some very cool features like user-owned KYC and native account abstraction, which solves a bunch of the onboarding and bottleneck problems that many L2s suffer from. So you're going to be hearing all about them later in the program, but if you want to learn more and better, if you want to join their launch program, Engen, E-N-G-E-N, you can click the link at the bottom of this episode. Go check them out. Tell them I sent you.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another episode of Bell Curve. You got Michael's 1 and 2, Vance, a little pre-4th of July episode for everyone. How you fellas doing?
It's good to be back.
You in a bed right now?
I am. Yeah, I am.
Recording from the bedroom.
Yeah, being a very casual vibe. I'm actually I'm at my buddy's
bedroom?
place. No. I'm at my buddy's place in Martha's Vineyard, and there are like 7 of us in this house, and everyone is confined to their own little like working chamber here. So I'm on the bed.
What you gotta do?
Dude, I'm not complaining. The vineyard is great for 4th of July, so I'm a happy camper.
Very, very Americana.
Very rich of you.
I know. I was gonna say I heard the wasp come through in my voice there a little bit, but what about you? Are you guys doing any fun plans for the 4th?
About to go to the Bunkers. Michael's going to Tahoe.
Nice.
Yeah, grilling, chilling, nice. all that stuff.
Good old American fun.
Exactly.
Speaking of American fun, that's a little segue into. We had our first presidential debate last week. I don't know if you'd call that American fun, but I guess the high level to just give a summary. It was about an hour and a half, which were in some parts pretty funny, in some parts relatively painful, but at the risk of editorializing, I think Joe Biden came off pretty poorly. And what was meaningful to me about this debate was that usually it's the Republicans that are saying, hey, our guy did great, and the Democrats say, hey, our guy did great. But it was crazy, like right on a dime. The debate was hosted by CNN, and immediately after you had pundits saying, hey, we might have to make a change here, and the president didn't do what he needed to do. What was your guys' take on the entire thing?
My favorite part, first off, I think it was over within the first 2 minutes.
I know,
but it didn't.
I texted Michael within the first 2 minutes. I'm just like, holy shit, this is over.
And it didn't get better, at least for the first 20 minutes. I mean, look, they're both old, but there's an obvious decline in President Biden. And I think you just compare and contrast the conversations that were going on with him in 2019 and 2020. I mean, it's accelerating at an exponential scale, it seems. And there's been waxing poetic of, he's not sharp between, outside the hours of 10 a.m. and 4 p.m. And it's like, come on, like we have to hold our president to a higher standard. And, he had a cold and his voice was raspy. It's like, no, he totally misspoke multiple times. Or, I think the biggest part, I mean, there's so many takeaways. which I think are interesting. The first is the gaslighting that has been going on by the mainstream media for the last year and a half has been found out and completely exposed. You've got an about face in terms of the support and, whether it be the large donor call that apparently happened last night, or the fundraiser events that were going on at the end of the weekend, apparently on Long Island and I think New Jersey. It seems like there is dissent among the ranks, and there is total panic right now, because what do? You're stuck between a rock and a hard place, and it doesn't look like it's going to have a clean solution either way. But I think what is patently obvious is that it's a question as to whether or not there is real energy and aliveness enough to be able to have the role that he's in right now. But it is definitely something that is concerning, and it's sad to see.
Yeah.
Do you throw this poly market up here? Not looking good for Joe. I mean,
which one is it,
Michael? This is Joe Biden.
Oh yeah, but what's the? I can't see the top of it. Oh, is this just who will be? Oh, presidential winner. Yeah. I mean, look, the poly market. One of the big winners in this entire last 4 or 5 days has been poly market. Yep. Watching the markets trade and expectations around everything from who will be the person that steps into the void, what are the chances that he'll drop out, who will be president. All of these questions are being traded and markets are being made, which has been really fascinating to see. I mean, part of the interest here, I think, is if you just follow the poly market hour by hour, or it was even shorter than that, maybe 15-minute increments over the course of the debate. Within the first 15 minutes, there was something like an increase of +8 or 9 spread difference. And so this stuff is trading in real time. And that, I think, is probably one of the first times that we've seen markets like that for major events like this.
Yeah. So you mentioned, Michael, the gaslighting that the media has been doing, and I agree with you, but I think an important nuance maybe to point out, or maybe people don't care about it, but this is what I've always thought about the media, is when people criticize it, is that there's the implication that this is some top-down thing and some head honcho in a shadowy room is taking orders from someone in the administration, and then that ends up being what you see. Whereas I think the way that it actually happens is that there's just a strong, entrenched, frankly, political bias of the average person that works at these types of, frankly, the mainstream media, like liberal, there's a liberal bias, right? Obviously, at these organizations. And I think it ends up bubbling up almost from the bottom up. Like a lot of the most, like the biggest zealots that you see organizations actually aren't the people in charge. It's the people who are rank and file actually writing a lot of these stories. And my interpretation of that is that there's been this wave of do anything. We're protecting democracy here, anything to keep Trump out of office. And it's just led to this gradual, you're just ignoring the facts that are looking at you in the face, which is that this guy can't string 2 sentences together, and he obviously can't do the hardest job in the world.
He's completely toast. I think what Polymarket basically says is that the election was won or lost last night. I think there's a lot of logistical things into replacing the candidate that you'd have to go through. I don't think that's really possible 6 weeks, 7 weeks out from the convention.
Right.
And so I think it's time to start planning about 2024 and 2028. That's a unique take where it's just you can kind of skip the storylines of the summer and the early fall. The DNC will be a disaster also in Chicago. Maybe it's not quite like 1968, but it's going to be pretty close. So I think you can just price in a Trump win. And I think a lot of I totally agree with Michael's takes. I think there's been a lot of takes that are basically agreeing. Even the New York Times editorial board is now pushing him to drop out. That would be unthinkable a week ago. I do think Jill Biden is a pretty interesting character.
Coincidentally,
Machiavellian, treacherous, snake, whatever you want to. I think you can maybe apply all of those labels. There was a Vogue cover that she did today. I'm just gonna pull it up.
man, so tone deaf that this landed today.
Just look at this. Just look at this. I mean,
So Mike,
just some
just
dark
to address,
shit, in my opinion. Like, who is really running the country? Like,
Well,
if there's a Vogue cover of Joe Biden the weekend that they're supposed to be deliberating the fate of Joe Biden at Camp David.
I mean, look, what I mean by the gaslighting, Mike, is it's and talk about protecting democracy. It's about having common discourse and backing up perspectives with evidence and fact. And what we've had over the last year and a half is all of these pundits, whether or not it's the mainstream media and the rank and file employees of these firms who are writing the stories, who have the firsthand experience, the firsthand evidence of him, with vigor and energy and coherence. But what you've constantly heard from people like Reid Hoffman or other major political perspectives, advisors or people close to the president, whatever the colloquial term is for those sources, is that he is at his peak. Joe from I can't remember his last name, but he's the MSNBC.
Scarborough.
Yeah, Scarborough says that he's at his peak performance right now.
He's the best Joe Biden we've ever seen.
It's the best Joe Biden we've ever seen. Like, that's the gaslighting.
What a bunch of bullshit. I mean, and they were the first people to turn on him.
Well,
CNN the debate.
CNN was the first to turn on him.
But it was all of them. It was instant. And
David Axelrod, Van Jones, everybody.
David Axelrod had kind of turned before, but I mean, now the polling is starting to come out. There was one that came out on Friday for New Jersey, which is not a swing state historically, that had Trump up 1. Like, if that is anywhere close to real pre-debate, that implies like a 10-point shift in the electorate. Like, I think what they're playing for right now, the Democrats generally, is just they can't get slaughtered. Like, if they lose by like 20, you got to kind of break up the party. Maybe you like send the progressives one direction, you get the center left in the other direction. But like, there's really no ideology tying both wings of the party together. And if they lose by a lot, I think you risk like this like identity crisis. If it's like the DNC is a disaster and then they lose the popular vote by like 15, American politics probably looks quite different in 5 or 10 years.
Meanwhile, you've got the independents who are actually surging. I don't know if you guys saw this, but there was a YouGov poll. It's obviously sliced, but it's between the ages of 18 and 34. And the poll came out post-election or post-debate, and it was sort of a snap poll. It was only, I think, 1,100 registered voters, but it had, within that age range, it actually had Kennedy in second in front of Biden.
Wow. That's crazy. Yeah,
Biden currently is not winning a single swing state in any of the real clear politics polling averages.
Yeah. So should have included this at the top. Obviously, none of us are political pundits or experts here, but do you guys think that the DNC has to use the JCal term, do a hot swap here? Like,
I don't know how that can. So that in Wisconsin and Pennsylvania, it's illegal to not have the primary candidate victor be on the ballot.
It's over. I mean, I genuinely think what you're going to see is like today, Monday, July 1st, is the first day of the second half of the year. Everyone probably has reset their positioning to some extent. You'll probably see different things catch bids. Also, the fall is the most bullish point for markets generally. I think basically you're going to have the markets price in the Trump win, then price in rate cuts as a result. Because first thing Trump's doing is like, he's talked about having unilateral control over the central bank, or at least some input. I think you're going to see, because the markets are probably 6 to 12 months forward looking, a lot of this stuff get priced in, which is good.
Hey everyone, wanted to give a big shout out to today's title sponsor, Sei. Now, I want to talk to you guys a little bit about why I think Sei is cool from a design standpoint, a big problem that it solves for ETH devs out there, and then some cool stuff that Sei has coming up. The reason I like Sei from an architecture perspective is, again, it's a very fast blockchain, parallelization, all of that stuff. But Sei has essentially been custom building block space, which is for consumer apps and DEXs. Now, they have some very cool features which enable that. So twin turbo consensus, optimistic parallelization, Sei DB, all of this stuff allows you to reduce the time to finality, make for very, very fast transactions. So if you're building a consumer app or a DEX, this is basically the blockchain for you. If you've been building in the EVM, you love the EVM, but there are some restrictions about it that don't support your app. So maybe you can't do fast enough transactions or it's not parallelized, whatever it is, you can now take all of that stuff that you built. You don't have to start from scratch and you can build it on Sei. Now, recently they've launched V2, but also public devnet. So the way that you can follow that and keep up to date is go and follow Sei Network on Twitter. All right. Thanks, guys. Hey, everyone. This episode is brought to you by Kinto, the safety-first L2 with user-owned KYC and native account abstraction that is accelerating the transition to the on-chain financial system. Now, we've been talking about Larry Fink on this program and how he's been shouting the good word about tokenization to all of his buddies on Wall Street. This is happening. And the very cool part about Kinto is that they are built to accept a whole bunch of assets and a whole bunch of users from the traditional financial system, which current L2s have done an okay job, but there's a lot of room for improvement for onboarding. So it features very nice things like user-owned KYC and native account abstraction that solve some of the biggest blockers around mainstream adoption, namely security and user experience. You can become a founding member at engine.kinto.xyz. If you believe in this on-chain financial system, join Kinto's launch program and thank me later. Cheers, guys. And the link, bottom of this episode, click it now.
Let's talk about what the market impact what the impact on markets could be if there's a Trump sort of win. So we should also talk about the Chevron Doctrine, which is it's a super important change to
Massive.
a pretty bedrock like legal precedent that just got overturned after 40 years. And so there are these winds of change that are blowing in terms of like the regulatory apparatus of what's going on in the US, and that has huge implications for crypto. And then there's also like a market like Trump's policies as well, and how the market is going to react to them. Let's actually start with the Chevron Doctrine. So the Chevron Doctrine was a case that was in between Chevron, the company, and the NRDC about 40 years ago. And it was it set up this legal precedent, which is basically a tie goes to the runner. When there's a regulatory agency that the US legal system will defer to reasonable interpretation. And that's been going on for 40 years, and it's given regulators an enormous amount of autonomy, right, to interpret different legal doctrines. There was actually a little bit of, yeah.
Well, it depends on who you're defining as the runner. I would almost say it's like it sets up the situation of like tie goes to the umpire, because what you're effectively creating is a situation where the regulator has more power and the ability to interpret and therefore enforce whatever they feel is reasonable. And whenever there's any sort of confusion, the regulator gets to be able to say, hey, this is how we are interpreted in the law, and therefore this is how we are enforcing it. And so enforcement actions can come down from their interpretation of the law. And there's another element, that happened here as well, which is the SEC. I can't remember the name of the decision, but it was another Supreme Court decision that happened last week where the SEC is not allowed to continue forward with its internal tribunal of being able to enforce internally. There has to be a jury. There has to be a trial by jury. Was another decision that was made. Basically, what this is doing is it's removing the power of what people used to call the fourth branch of government, which is the regulators. And it's putting it back into the hands of, the people, but also the judicial branch and the legislative branch to be able to make laws and then enforce them as the Constitution, was built to proceed with. And Chevron Doctrine, I think, is an interesting one. And there's a lot of case law built up around it. There's a lot of examples of it. But broadly speaking, it provides a lot more deregulation because it will push things to the judicial branch and decisions will have to be made through a court system, as opposed to the interpretation of regulators who, as we've seen, are at the beck and call of political winds every 4 years.
Do you guys think, so here's something I've been thinking about the last week or so. Do you think part of the reason why there's just been such an onslaught of indictments coming out of the SEC is because they had a sense that this might be possible and they sensed that this was their window of opportunity to push a lot of this stuff through? So obviously there's potential changing of the guard between the Dems and the Republicans, and it's very doubtful that Gary Gensler would keep his position with Trump in charge. But do you think that they knew that this might be going through and they kind of view this as a window of opportunity, or no?
Unclear.
Who knows?
Yeah.
It's
Yeah.
also like these cases are going to take years if they even go through. So
Yeah.
it's not like the agency has a mandate to pursue these cases.
And it's also unclear as to like, I actually frankly don't know the answer to this. This would be a good question. If somebody does, I'd be curious to hear. But like, if you start a case and then a Supreme Court decision comes down and says, you know, in the case of removal of the Chevron Doctrine, does that negate cases that are started prior to that, or how does
It does. I was just reading, I mean, yeah,
like if it's unconstitutional, you know, it's backward looking too. You could see a lot of people get a lot of restitution. You could also see a blank slate of crypto cases, which would be very bullish.
So in that case, it wouldn't necessarily hold that if they thought that Chevron was coming down the pike and that this decision was doing. I mean, the oral arguments, I think, for this happened in something like April or February. Maybe it was January. Actually, no, sorry, it was in the fall of last year. But so like this, you should have been able to tell that this was coming for a while, and so I don't know if that changes your calculus as to whether or not you bring things in the meantime.
Yeah, it's a good point. But the idea is, I guess, like the TLDR for folks who don't care as much about getting into legal weeds is it's a huge shift in power away from regulators towards the legal system, the judicial branch of the government. And I guess the way that directly connects to crypto is that we've seen time and time again, I mean, not obviously 100%, but generally the courts have been much more favorable to crypto as an industry than regulators have, at least than the SEC has been.
So that's actually one of the big things that also happened, which is the Binance case, which is the ruling that found, and this is built on top of a lot of the decisions that were found in the Ripple case as well, but that secondary sales of tokens are not in and of themselves investment or securities transactions, because those secondary sales of tokens are not in and of themselves investment contracts. And that doubling down of that perspective, I think, adds to the argument that these exchanges are not necessarily trading securities, which
is massive. So yeah, I guess this is just going to be. I mean, I sort of see this in I mean, Trump put a lot of new members of the Supreme Court in, right? And so I guess you could look at this and say this was, probably a pretty politically savvy move. The other thing that Trump also just got was like immunity, or there was the Supreme Court came out and said there was going to be essentially an extremely high bar of judging past presidents' actions while they were in office. But also, I think it just means that we tend to talk obviously about things through the lens of crypto, but people are pretty sick of the SEC's overreach outside of crypto as well. This is not just a purely industry opinion. Like they've just gone, when they felt like they had wins at their back, and now it's kind of blowing back in their face a little bit. So
I mean, once again, political parties and whoever happens to be in charge chooses, by and large, who is at the helm of these regulators. And the reason for the repeal of the Chevron Doctrine is the logic held that it was an extension of the executive branch to be able to have additional powers when you are interpreting the laws that you see fit without any sort of control held by another branch or any sort of oversight and checks and balances held by the other branch. So that's where this is a removal of additional powers and a shift back from executive to judicial. And this has been 40 years in the making, but it was definitely sort of a loophole, I think, that built up over the last couple of years to decade.
Yeah. So there should be, I think, tailwinds in general for crypto moving forward if we get the judicial system making more of these decisions than the SEC being able to unilaterally do more or less whatever they want. I would love to get your guys' interpretations as well of the impact on, I guess, crypto specifically, and then I guess like what a Trump presidency could mean for markets in general. Like one thing I've been just trying to sort of sit and think through is, I've seen a couple of, these are obviously early things that are shaking out, like what his tax and foreign trade sort of policies would look like. But seems to be in favor of lowering taxes, which obviously some people like. But he's also talking about, he actually was briefly talking about the idea of eliminating an income tax and collecting income via tariffs, which is
Let's go. Let's go.
It's not going to happen.
Yeah, I know. But all these things trend to be a little bit inflationary, right? Like, and just zooming out, that makes sense, right? He is a little protectionist. He is speaking to the little guy, a little bit of populist sort of rhetoric, and generally that stuff tends to be inflationary. So one thing I've been trying to think through is, if these policies did actually end up turning out inflationary, how would you sort of square a resurgence of inflation against the obvious, like, kind of growth narrative that Trump represents, the deregulation narrative that Trump represents? Like, they're two kind of interesting things that could collide. I would just be curious, do you guys share that idea that some of these policies could be inflationary? And if so, what do you think it means for markets?
I personally don't. I'm personally of the belief that the inflation was caused by mostly anomalous supply chain difficulties during COVID. I think the money printing certainly helps long term, but I view money printing as less like CPI inflation and more as like luxury goods, stocks, real asset inflation. Just because, like, I think a lot of people were taking that money and buying stocks and pushing them up, and this is how PEs kind of generally rise over time, is just a slow inflation of the multiple, which I think is definitely happening in U.S. stock market. So I don't think like cutting interest rates and like turning QE back on, if that's what he does, I don't think that's inflationary. I think the economy is probably in a weaker position than it was during the beginning of COVID, where you need rate cuts to like really stimulate employment, and like rate cuts are going to offset slowing of the economy, which is already in process. So I don't think it'll necessarily be inflationary. I think you're going to see various industries take advantages from others just under a Trump administration. Like startups probably get turned back on to some extent with more M&A and IPOs. The SEC just like being gutted or being less authoritarian would really help markets as well, in terms of like, what do they allow to come to public markets? Energy probably does pretty well. And I think crypto does really, really well. And I think what you're going to see from crypto is like, there will be a long-term effect of just like lowering the temperature around getting entrepreneurs into crypto. Just like there was a chilling effect with the SEC, kind of like a lot of traditional entrepreneurs are still like, is this like legal to do? And then I think you're also going to see short-term some very tactical wins via companies that can get integrated into the banking system, who can get, like, the lending markets are still dead in crypto. Like maybe someone can hook up with a prime broker and get them to finance, stuff. So I think there's a lot of different stuff. There'll be crypto IPOs likely. And I think you kind of see this turn into a favored trade, which is then kind of put on by people who are trading markets around it. So more ETF inflows, things like that.
Yeah, only thing I'd reiterate is until we actually know what the economic policies are, it's hard to comment on them. But if we assume that there's going to be a general stance of deregulation, I think that will have, or opening up of markets, however you want to look at it. But the main things are, and just to like hammer this point home, there's been zero M&A and effectively in the last 4 years, and in the last primarily 2.5 years. But what this has led to is a complete standstill of just about every single venture-backed company that is hoping for some sort of liquidity event. And keep in mind, the assumption here is that the venture capital industry is the funding source for just about almost all of the innovation economy that exists. Of the Mag 7, every single one of those companies was backed by a venture capital firm at one point. And that is the economic growth for what's been driving the economy forward. There's a tale of two cities in terms of the stock market. It's also what's driving the stock market to all-time highs, whereas the median stock price has actually been flat. The Mag 7 is what's driving the all-time highs. So any way you look at it, the economic center for our economy in the US is innovation. Without an innovation economy, you don't have the ability to continue to fund it. And as venture investors ourselves, we have to deliver value back to our investors for us to be able to continue forward. And when we have multiple years or decades of lack of distributions, it means that a lot of these firms or a lot of these funds are just not going to continue forward. And so the historical, number one source of distributions for these venture funds has been M&A. Sure, some companies go public, but now the bar for going public, I don't know if you listened to this, Mike, I know Vance did, but there was a COTU conference talking about
I saw
what the new requirements are to go public. You have to be a $10 billion company doing $1 billion in revenue, probably having about 20% of that in free cash flow and growing over 20% a year. That hurdle is gargantuan. And so let's just assume that maybe one company every 1 to 2 years that is venture backed hits that level out of the hundreds or thousands or tens of thousands of companies that are started and funded every single year. We're not talking about a robust innovation economy that is able to fund itself for decades going forward. So the major note here is you have, and to Vance's point, entrepreneurship in other industries like biotech, like crypto, like energy, capital intensive, there's not regulatory clarity, and it's just been prohibitive in all different types of ways. The point is, if we can start the M&A activity, that gives lifeblood to the innovation economy going forward. If we can somehow make it easier for companies to go public, that also gives lifeblood to the innovation economy. And if we can give a path forward for crypto, entrepreneurship in crypto will continue to stay in the US, which is beneficial to the innovation economy in the US. All of these things are things that will happen with things like the Chevron Doctrine and with things like a stance on sensible regulation, but in general, being able to have the innovation economy, regulated in the right way.
Last thing is, I think the Biden collapse on Thursday now ups the odds that it's a sweep. Senate, I think it's I think it's a lock for Republicans to win. House, there's just so many of these races that it's hard to tell if you're not a political, basically pollster, what the aggregate map looks like. But this probably drops your average Democratic candidate 2 to 3 points. And that is enough to flip enough of these races where Trump could have a clean sweep of all three, the House, the Senate, and the presidency. And then it's he could do the tariff thing. He could do any of these crazy economic policies, which could be good. I have no idea. But I think there will be some volatility around what his plans are if he doesn't telegraph them soon enough. Where if people think you're getting 10% tariffs, that probably changes a lot of the average CPI basket. That the tariffs would be the thing that would lead to inflation, not the money printing, in my view.
The tariffs, that's the same. Totally agree with that. And we don't produce anything here for the most part. I mean, that's not really true, but we don't produce a lot of stuff.
We don't produce anything. So maybe economics aside on the tariff point, the one part that I do agree with, and I think it was, I can't remember which interview, I think it was All In podcast where he went on and talked about it. His point on the tariff point was look, tariffs is one part of it, and getting money in the door on tariffs is one point of it. The other part is power, and being able to negotiate and use this as leverage with some of our either adversaries or partners. There's a lot that's wrapped up in how do we onshore, how do we reshore, how do we start building things back in the United States again. It's not going to flip on a dime. It's going to take years, if not decades, to be able to onshore a lot of these operations if they ever come back in general. But there's a lot that I think, in terms of, just to throw it out there, the CHIPS Act, you've got the Inflation Reduction Act being able to provide subsidies for certain types of industries like energy to come back into Western hands. The CHIPS Act, obviously onshoring, a lot of the production of chips. We'll see whether or not that can happen, but they're going to throw a ton of money at it. There is definitely an effort to bring it back in. And I think that, aside from the 10% or whatever it would be from an economics perspective, there is a lot that's baked into that. That's not just economics.
But I mean, what you're setting up for is the Jimmy Carter to Reagan transition. That is the closest political analog that you could find. Where I feel more than anything, Trump knows that the country is in dire need of a psychological boost, which is the same thing that Reagan did. And if you get enough people believing that we're back, we're back.
You know what's really funny is that "Make America Great Again" was actually a Reagan slogan.
That is true.
It was. You know, the M&A point like deeply resonates as well. I mean, just as an anecdote for Blockworks' business, you know, like the companies that we are set up to serve are not like seed or Series A companies. Like historically, we work with like realistically like C and above, right? Because that's the type of companies that have marketing budget. And I don't know, you guys would know this better than me, just from your seat as investors, but it seems like a lot of those companies are pretty starved of capital for the time being. And you know, there haven't been very many successful exits in crypto. I'm sure that's not lost on a lot of folks. Like it's tough to IPO in general. It's extremely difficult to IPO as a crypto company, and there hasn't been much M&A at a really high level either. So yeah, if I was like a late stage private investor, I wouldn't exactly be looking towards crypto companies.
I mean, just as a couple of examples, Plaid was set to be purchased by Visa in 2021 for $5.3 billion. The deal consummated, but it was ultimately blocked. And Plaid went out, and this was 2021 times, but the rumor was in 2020, they finished the year with 170 million in ARR, and they were growing 40% or 35% year over year. What now they are expected to hit is 280 million in revenue, and they're growing 20% year over year, 4 years later. With interest rates the way that they are, and they raised again at I think a 15 or $13 billion valuation. They raised again, and now you have to clear that pref stack to be able to get any liquidity back if they were to sell. But you now have slowing growth, revenue multiples coming down to reality, and what could have been a $5 billion win from an M&A perspective, which goes back into the innovation economy, it's going to be hard pressed for them to be able to get back to 5. Like that type of an opportunity is just completely missed. Not to mention the time value of 4 to 5 to 6 years of money. It's massive.
That's hate to see those slip away.
Yeah, you hate to see it.
It's tough.
So when do you guys think if because I'm in your guys' camp that I think it just feels like I don't really know what moves the Democrats have, because I agree with you. I think it'd be very difficult to swap someone in, forgetting whatever rules specific states have about needing to be on the ballot, whatever. It would just be very difficult to build cohesion around another candidate at this point. I think it would be politically almost impossible to do that.
There's no other candidate.
And I don't even know how you could do that in 3 months' time anyway. Like it takes time to just build, trust and brand with the American people. Like but anyway, so
at least it's still maybe. I mean, it's not, but you could convince yourself it's a toss-up if you're in Biden camp.
Yeah.
Well, that's what they're going with, is my guess.
Yeah. I don't know what. Yeah, it's been really hard to see the logic or where they're coming from recently. But that aside, when do you guys think this starts to get priced into crypto markets? I was actually a little bit surprised that Bitcoin didn't do. I thought, honestly, watching that debate, like everyone walked away with a really similar thought, which was like, this is like Trump's going to clean up here. And I feel like if you're looking for exposure on that idea, like crypto is a pretty good bet. And I was a little bit surprised that Bitcoin didn't react more strongly.
It's going to take a while. It's going to take a while. We're like on Polymarket looking at the odds. These people are like managing trillions of dollars. They will need the polls will need to get so bad, and I think they will in the coming weeks, that will happen. But it makes sense that it didn't happen on Thursday or whatever. And I think the other thing is like we're still getting through all these Mt. Gox and German government coins. Like we literally found 15, 20 billion of coins last week. Maybe some of them are spoken for, will be in diamond hands, but maybe half of that gets sold. It's crazy that negates all of the ETF. Like a lot of the ETF inflows to date is just like that chunk. For the record, ETH does not have this problem.
Yeah. So there's a couple of things. Just talk about market structure from where we are right now. You've got the coins that were found, which they existed. We just kind of forgot about them in the form of Mt. Gox.
We found them. Everyone always pushes this off by 6 months for the past 10 years.
Yeah, I mean, but it sounds like it's happening at least starting today. They said early July is when they start distributing, and I think directly into people's Kraken accounts, and which is kind of interesting. You just like wake up one day and you have a bunch of Bitcoin in there. So it'll be interesting to follow that. German government is selling. I mean, there's definitely some selling action going on in that's sort of like exogenous or just very specific to those situations. The other thing that I would say is going on, and this is more commentary around the fund ecosystem, which is just about every single one of the funds that we've been talking to or that I've been talking to recently is basically gearing up for either Q3 or a Q4 fundraise for their next venture fund. And what that implies is two things. Everybody's going to be coming back to market at the same time, so get ready. But also, you're going to start to see 6-9 months from now who performed well and who didn't based off of their fund size. We've already seen one fund went from 2.5 billion to 850 million, and I think that kind of shows where the market interest is, but also where the market interest is for that firm. The other ones that I would think about too are, as you get to it, just like the way the conversations are going right now, you have to have DPI to be considered serious, and DPI means distributions. So it means in some of your previous funds, you have been able to get liquid and distribute back cash on those assets. What I expected with a lot of the firms that are gearing up for fundraises in the next and launching those fundraises in the next month, 2 months, 3 months, is that they're looking at the end of Q2, which as of 5 p.m. yesterday ended, they were basically selling things that they felt were able to be sold. And leading up into the end of Q2, that is the last marker that you would have to have an accounting package, so that if, let's say, you have an August 1st or September 1st launch date for your next fund, it means that your Q2 numbers are going to be the last numbers that you have to be able to present to people before you go out and fundraise again. And I think that this is sort of an under recognized point, and maybe it's just nuance that we think about because this is our business, and so we can understand the cycles a little bit more. But I think that there's been a lot of selling of assets leading into the end of Q2 just based off of the fundraising cycle and the market right now, which is requiring a lot more DPI than you previously had in previous cycles. So just calling that out as something
that's
different.
That is alpha.
And Michael and Vance, are the things that people are selling, like selling what they can? Is that like Bitcoin?
Anything that isn't tied down.
Okay.
Anything that's liquid. And it's like a sliding scale. It's like how much DPI do you need is based off of how your fund looks in terms of pre-DPI returns. And so, like, let's say a really good venture fund is net 3x. And if you can net 3x, like that's your top tier. And so let's say you're at 3x. Well, maybe you don't really need any DPI because you're sitting on gold. But if you're at like a 2x and you got to like build a case for why 2x is going to turn into 3 or 4x over time, it might mean that the best way of doing that is to say, hey, you know what? We were at 2x, but half of it's already been distributed. Hey, also LPs, we just distributed half the fund from your previous fund. Like, do you want to invest in our next fund? Just like take the returns and give it back to us. Like that type of a process, I think, will also be playing out.
Okay, let me ask you guys this. I don't know, you guys have probably seen this a little bit on Twitter, but first of all, I would say crypto Twitter is always an interesting place, but the vibes have been a little bit less than immaculate over the course of the last couple of weeks. And you've probably seen a lot of people say, hey, just leave the computer for July. And I've seen a bunch of different people say this at this point. And I don't know, it's sort of funny that
they're gonna leave, then it's gonna rip, then they're gonna come. It's like
how
it always works.
It is, and it's coinciding around kind of a local low. It looks like I've been just checking the total crypto market cap. Like we bottomed around 2.3 trillion. We're up a little bit. I don't know. I could just obviously not investment advice, and I'm not a trader at all. But it does feel like we're at some sort of local bottom in sentiment, and you've got people telling you to step away from the computer. It feels kind of primed for a little bit of a rebound. And I agree with you. There's been a lot of like the GOX distributions, the Germany, the US. They've all been selling Bitcoin. I think that's what's been weighing on the price.
I mean, crypto Twitter is just like built to desensitize you to crypto and kind of like underappreciate it in some ways. So time off is always a decent idea. But like it's like people are like, God, why aren't we at new all-time highs? Like it's like, okay, well, we found all these coins, like I told you 5 minutes ago. Like it's literally just, and it's like, well, this sucks, and like it's like we literally just gave you an explanation. Like we just relax. And the fact that it's like at 63, or what's it at right now?
Somewhere
64K, 63.5. Like, I don't know. I feel like people just need to take a step back sometimes. And like, even with all these unlocks, like ARB, I think is probably a third or half of the way through its unlock schedule. It's still an $8 billion token. Like, that's an incredible outcome for everyone that was really to the community, the venture investors. And like, okay, Celestia is getting beaten down. It's like, well, it opened up at 1 billion and it's at 6 now. Like, sure, it dropped from 20, but like, that's always going to happen. I don't know what people want. It's like, I think
they want up only, Vince.
that will come back. It's like it always comes back. We're right below all-time highs. The ETFs, the interest rate cuts, like the Donald Trump stuff. The setup is there, and this is the last thing I'll say is like, if you lived another 100 years, you'd never live through another rate cut cycle like this. Like, this is what we play for.
Yeah. Exactly what I was going. Well, not exactly, but generally what I was going to say, which is the way we know that we're in a bull market is because we have 20%, 25% drawdowns. 20 to 25% drawdowns don't happen in bear markets. You're just flat. Bear markets are marked with flat, non-existent volume, non-existent interest, and just like staying there for months or years on end. Like the way that you know that you're in a bull market is that you have these massive pullbacks. And those are great opportunities to be buying. And these pullbacks last weeks, sometimes months, but the bull trend is unaffected.
I think people are disgusted with the alt price action. I think disgust is basically how I would characterize it. I think that has to be close to a sentiment low.
Definitely.
But think about it. Okay, so let's pair that. Like, alts have been getting shellacked the most over the last 2 months, more than any other category within crypto. And let's pair that with, okay, the last 2 months is the last 2 months that these funds have to be able to take anything that isn't bolted down, all of the unlocked tokens that they're sitting on, and slowly sell them over the course of the next couple of weeks, couple of months, to be able to get in before June 30th so that they can say to their future potential LPs or existing LPs, here's some money. Do you want to give it back to us?
Okay, that's some good alpha.
Also, wonky stuff always happens. Like, even in TradFi at quarter ends, like, people are, locking in tax losses because you have to pay taxes quarterly, or they're locking in tax gains or whatever. Also, all the 13Fs are due at the quarter close, so everyone gets to see what you're holding in securities world. So, like, I think the other thing is NVIDIA has kind of been getting hit. Like, this is kind of like a softer period for equities writ large. Like, it's up today, but there's this, I told Michael about this. There's this levered NVIDIA product called NVDL, which is, I think it's like 2 or 3x levered NVIDIA.
It's 2x.
It's 2x levered NVIDIA. And, there was a point during the last week where it was down like 33%. I think it's back to like 25% down, but a lot of retail's not having fun right now.
The big point on that one is that I think it still has 6 billion of AUM. So like, when it's down,
I did not know it had 6 billion. I thought it was a lot. I thought it was like a bill. I mean,
no, it's big.
There's just so much money that's in fixed income products right now that's looking for something to do, and it feels like, I think my unique take right now is I think there's going to be a lot of weak data, and they're going to cut earlier, they're going to cut faster, or it's just going to be more severe of a rate cutting cycle. Like, how long has it been now with since it started? What was it, like 2 years and change since they started hiking rates?
Yeah,
crazy to think about that we've been at this for 2+ years.
Totally.
And that Bitcoin's at 63.
And the Bitcoin is 63. And like, look, like the psychological boost, I wish it wasn't this simple. A lot of it is just the price of money.
Yeah.
Like people are like the vibes are off, and like these industries we don't know if they're going to survive. And sure, some of them won't survive. Like I'm pretty bearish on the entertainment industry, other than like Netflix. But for everybody else, the cost of money is going down.
The other central banks, by the way, are front running us, and Bank of Canada's already cut, ECB's already cut. One of the ECB guys, I'll get Simkus, said that 2 more 2024 cuts are possible if the data comes in as expected. And
Send it.
There's one other dynamic which might
send that shit. And also they cannot cut. They cannot cut too much before we cut, because you look at the yen, it's down 14 of the past 17 days. They're getting smoked. Like once the US is like we're cutting, it's going to be like in unison. It's like every week will just be rate cuts. There'll be some Australian rate cuts, Bank of Canada, if anybody cares about that, European Central Bank, like it's going to be beautiful.
They care about it. But yeah, it's that's what's also been, you've also mentioned like, why are the vibes off? It's like, look at the M2 chart, which is just, that's been straight down. And then look at the dollar. The dollar is really strong. M2's down. It's like, and the more we keep rates up as other central banks cut, it's going to draw more capital into bonds in the dollar. And that just can't hold forever. It's already, the dollar yen cross is at like 160. That's a level that it's been topping out at. And you never know from policymakers, but they don't want to go. Yeah, we are. Yeah.
I mean, that chart is crazy, but I think honestly, like if you're holding crypto and you're like, man, this thesis or this isn't playing out, I think first of all, sell it and go do something else. But if you don't do that, like I think like the next 6 months, the back half of this year, I don't know. I'm just feeling good about it.
I feel good too. Yeah.
There is no alternative to crypto. Where else are you going to go?
So I totally agree with all this, but maybe like the back half of this year, I agree with what are going to be the first catalysts, because I don't know if there's really anything that happens. And I know that you have this like
price going up will be the catalyst.
Right. But what's the catalyst to getting there? Not for crypto particularly. I'm talking about like global macro.
I think just like more of 2024 to 2028 starting to take shape in a real way. It's like, are you serious about 10% tariffs, or is that just like opening gambit? And then if you get more visibility on the House race, I think you kind of like it feels like you'll have basically perfect visibility into what he wants to do for the next 4 years. And I think his White House is going to be staffed by a lot more talented people, which gives it more believability.
Who's VP?
Who's VP? I mean, I personally like JD Vance. I kind of think it'll be Doug Burgum.
Polymarket says Doug.
Yeah, I believe the Polymarket Autis. I don't think it's going to be. I mean, I wish it was going to be Tulsi. That'd be such a cool ticket, but it doesn't feel like that's in the cards.
Polymarket's a super interesting business. I agree, Michael. It's been the winner of all of this stuff. So here, because we've been talking about, you guys gave I can't remember which of you, Michael, I think this might have been you, but you just said something about meme coins, about how they remind you of those like early viral videos on the internet. I was listening to Tarun say, he was talking about the way that ads get delivered on networks like Facebook, and making the comparison that you can sort of squint at meme coins and see them as something like an attention algorithm. And if you were to, build some kind of, there's something there, right? It wouldn't work perfectly like this, but you could see meme coins representing something about basically being like a market-based, like attention director. And it sort of feels like Polymarket is zeroing in on something like that, because that's the challenge to their business, is that that's the sort of unattractive part about betting on Polymarket for me. That's why I don't do it. It's just, you're kind of taking a punt, and the best that you can do is 100%, but the meme coins have more upside. But, you can kind of squint at all of these things and see something that looks media-ish.
I agree. I think we haven't figured out, broadly, well, until we have massive platforms, and even if we have massive platforms of the likes of Facebook, Snapchat, Google, what have you, there will be ad tech that exists eventually for Web3, but it won't look and feel the same. And I spent 3 years building, ads at Snapchat. So I know a little bit about this tech stack, but generally I'd say it's not going to look and feel the same.
Yeah. Okay. Last question for you guys here. Do you agree that there's I would be curious where you guys fall on this whole argument that I was referring to a little bit, like the big VCs are value extractive here, and like early in the round, I think this was Arthur from Defiance. He came on Empire to talk about this, but where do you guys fall on that whole spectrum? And I actually see it as there's a gap in like later stage privates and liquids, I think. But I think that's, to editorialize my own opinion, I don't think that's the fault of funds for raising and allocating, but it does feel like I'm just asking selfishly here, frankly, because a lot of Blockworks customers are like later stage companies, and it doesn't feel like there's a lot of capital available to them. Is that incorrect? Or what's your guys' thought about where capital is finding its way into crypto startups?
Mostly incorrect, I think. I do think there's a difference between investing in products which you think will work and become real businesses versus investing in products that the market wants. But I think at the end of the day, it's a free market. And as long as there's disclosures and people are adequately notified, which is a lot of what the new crypto bills want, I think that's fair. I certainly think there's a cynical take you can have where you're like investing in things to invest in things so that people will buy them from you, which we don't do. And also if you're a liquid hedge fund manager, which Arthur is, I get it. You'd like to see more efficient markets, but go do that yourself. Go buy these. If you think these tokens are expensive, short them. If you want to think they're valuable, buy them. It's a free market. That's what crypto is.
I guess I'm not understanding. What was his point exactly, or what was his tweet? I didn't see.
It's VCs are dumping on retail and all this stuff, and I think there certainly has been projects which have not worked, which people have sold into retail. Obviously, that's happened. There's also been people who've had their lives changed by VC funded projects. So that's the other side of the coin. Where they net out, I have no idea, but my sense is the big outcomes in crypto have been far larger than the losers.
Yeah, I think a lot of this comes down to sort of incentive modeling, where to Vance's point, if you got an open-ended hedge fund and you're trying to make venture investments out of it, it's going to get weird and it's going to get wonky. You have to take a long-term perspective with any of these investments, and that's obviously what we do, but that's also what I think is the dominant investing strategy in this industry, just as it is in any innovation economy, outside of crypto as well. It's you have to take a very long perspective for the outcomes to be worthwhile. And so I think that's number one. And number two is it goes back to this question, and we've seen this thing pop up every 2 years. It's what's the value? Is it just capital, or is there any sort of additional things that VCs or venture investors or angels bring to the table, and why are they the ones who get access? And it's nobody else is writing $5 million checks at seed stage to build these things. Also, nobody else is answering the phone when shit's hitting the fan and you need help with things, or nobody else is giving advice who's seen hundreds of token launches and token models and knows who to talk to and who can help when all these questions are being asked. I think going back to in 2020, one of my favorite themes was the anti-VC launches, and it would be great, we're not going to do it, we're just going to launch it. And it's great, congratulations, your universe of opportunity is anything that exists on chain already, because if you need to spend any time, let's say writing code or getting an audit done, you're going to have to raise some money to be able to do that. And so it's just the same perspective over and over again in different ways, shapes, and forms. And I think I can't remember the word you used, Vance, to describe the alt season right now. But it's just a lot of displaced anger, alt are down, oh, VCs are bad.
Disgust. Disgust. Also, I do think if we want to find out if tokens are valuable, we should just be launching more tokens. Is DA valuable? I don't know. Let's launch 50 more DA layers. We will figure it out if we do that. The alternative is like this, like we should regulate VCs from investing in private market startups because there's too many. It's like which one of those logical paths makes more sense to you?
I 100% agree with that. And I actually just think this isn't even a problem because this will solve itself, right? If there's like too much capital being injected at one stage, then a bunch of those companies are going to end up being worthless, and then money's going to enter at a different stage. I think there were a couple different arguments getting inflated or conflated there rather. But I guess maybe to close the loop on that, do you guys think there is this is my own observation aside from that, is it does feel like there are a couple of parts of the parts in the stack which get less capital than others, and it does feel like there are a lot of folks that want to invest in like seed and early stage, but not that many funds that are investing in later stage stuff. Do you guys agree with that opinion or not agree with that opinion?
I actually, I mean, disagree.
Okay.
Mostly because, look, there are a lot of funds, I think, and just like the number of funds, not necessarily dollars, but like the number of funds who are looking at the like very early stages. And let's call these funds anywhere from like 25 to like $75 million funds. And they're writing, $2 to $3 million checks. That's great. And that, serves that side of the market or that kind of part of the spectrum of opportunity. But what it doesn't do is it doesn't mean that you have a capital partner who can be with you over the course of $10 to $20 million. And that capital partner, if you don't have that capability, it's like you got to pass it off to a whole new set of people who you haven't spent time with. They haven't seen you operate. They haven't seen you got to like build a relationship from scratch. And so I think if you're at the like $50 to $75 million mark, you got to find partners who are at the like $250 to $500 million fund size that you can partner with so that they can be the next people to step in and help. And like that kind of separation is a big divide. And I think that you're going to start to see, people opt, founders opt for partners who can write the $2 million check as well as the $12 million check, because they just want to know that if they start working with someone, they don't have to go outside and like roll the dice again, that their bigger round at a later stage is going to be something that may or may not happen. They want to know that the partner that they're working with and they can show progress with is going to be the one who can follow them at the next stage.
Yeah.
Crypto venture is also like this big. So globally, I just looked this up, but 150 to 200 billion that gets deployed from venture funds into private market startups.
Wow.
Crypto venture, I would say that is 1 to 2. Maybe
it's more than that. It's probably like
3, maybe 4.
2 to 3, 2 to 4 every year.
2 to 4?
Okay.
So it's 1% of all other venture.
Right.
And people want to have like venture capitalists need like licenses to invest in crypto startups because like there's some imbalances at which stage. Like I think it's not like a disingenuous take. I think there's some truth to it, but I think it's like pointless. Launch more tokens and there will be incentives for things that work. And if those are apps, there will be incentives there. We think there will be. We bet on a lot of games. Like other people should follow us. We obviously support that.
Let's go, baby. I agree with that entirely. I'm literally asking purely out of selfish interest here because I want to see these.
We want people to buy our bags too.
I know.
We want that,
Yeah.
but that's what we have a lot of these ETFs for. Like we should be rooting for more of those.
The other thing I'll say is so in sort of the etymology of startup fundraising within the crypto space, there's like 2 or 3 rounds that are done before the token launches, before like you scale, right? And one of the things that we've been talking about is like, who's going to be the buyer in the liquid markets? Like who's going to step in? Like there's no tiger this round. There's no like hedge funds, like 0.72 was a big factor, last go around, all that. The biggest buyer of these tokens is going to be the tokens themselves. As they generate revenue and buy these tokens on market, they're going to be the biggest buyer and they're going to be the biggest owner of these tokens over time. And that's the mindset that you should have. Look at the maker ecosystem. It owns over 10% based off of the buyback over the last year. Like if you can own 10% of your tokens because the revenue that you're generating is being used to purchase that token on market, that's a huge advantage. But like that also solves a huge kind of question as to like who's buying this on net.
Also, guess what? Facebook has like 30, 40, 50 billion yearly annual stock buyback programs.
Right.
This is what TradFi does. This is what we need to do. And then after we do it, then other people will buy alongside those flows. The path is very clear to Michael and I think you as well, Ipo. I think I guess if you're like at the ground floor scrapping it out in meme coins, it can be hard to see like the larger vision of like how this all works towards creating large outcomes. But this is a time-honored tradition. Like there were hundreds of public companies in the 2000s that were tech companies that, went way up, went way down, and there was like a few that were, had staying power. This is capitalism.
Last point on the VC side that you guys are making on the value add. I've never understood this point. I think people have this like, oh, VCs get special private access or whatever. People talk about from the standpoint of how they think it should work from their perspective of what would be fair. But the other perspective that matters a lot here is the founder perspective and who do you want to take money from? And like good founders want to take money from good VCs that are going to help them and not 1,000 degens on the internet. They're going to scream at random shit. This is the classic thing in companies too. It's like your smallest customers are your worst customer. It's like your smallest investor, they gave you like a $10,000 check and it's half their life savings. It's going to be calling you every day to ask how things are going. There are market forces here that shape this. Also, it's not everything's a conspiracy to dump on you. And I've never loved that perspective.
The best founders are the ones who want to win the most. And the best way to dictate that outcome is to find the best capital partners and venture investors that also win the most.
Yes.
Yeah, we can give you like a 20% edge to make a lot of money. That's worth it in most scenarios. Like we talk on the phone, Ipo. Like you call me, we talk whatever shit. Like it's not like I'm changing your life.
No, but it's
like it helps.
It's super helpful. It's crazy helpful because also Jason and I just did a little podcast with David Hoffman's putting this like builder thing. If it is like sometimes you have like doubts about things. You're like, should I go this way or that way? And just like being able to hop on the phone and call you guys and ask for your opinion is massively helpful. So yeah,
that is literally all venture is.
Yeah,
there is no other magic behind it. It's just people.
It's very helpful, fellas. This has been a really fun one. I gotta run here, but enjoy the 4th. Everyone out there, drink some beers, eat some burgers.
Yeah, have some brews. Happy birthday, America.
Touch some grass.
Happy birthday, America.
Tell some stories.
Yeah.
All right, later.
All right. See you guys next week.
Hey everyone, want to give a final shout out to this episode's title sponsor, Sei. Now, there are a whole bunch of really exciting reasons to be building on Sei V2 outside of just parallelization. I want you to head over to sei.io to looking into building on their public devnet. Again, click the link at the bottom of this episode and head over to sei.io to start building something today.